This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices lower this morning. This is mainly due to weaker than expected auto sales reports. However, there's a very good chance that we will see at least a retest of unchanged or possibly higher on the day. Long term, we continue to believe that the main trend is higher for stock index futures. And we also believe that the Fed will be forced to keep rates as low as they are for longer than most analysts are anticipating. Over in the currencies, seeing the Australian dollar trading sharply higher. This after the Reserve Bank of Australia kept its benchmark interest rate unchanged at its policy meeting today. The majority felt that the RBA would be cutting rates at today's meeting, which in fact was not the case. Gains were limited by comments from the Reserve Bank of Australia governor indicating that there is a possibility that the central bank could be cutting rates at the meeting next month, which we would tend to agree with. So gains in the Australian dollar may be short-lived. Also, we are seeing the Canadian dollar higher after Canadian fourth quarter GDP coming in stronger than expected. Also, crude oil prices firming, helping the Canadian dollar and the Australian dollar. And in the euro currency, futures a little bit better. This after better economic data out of Germany. In the interest rate markets, we were lower in the overnight trade, coming back to steady with a recovery in treasuries, I believe linked to the weaker than expected auto sales numbers. I could see one more new low in the June 30-year bonds. There's a congestion pattern that we are in right now, in fact retesting. So if we do see a new low, which is not that much lower, I think that should be where the last of the longs finally liquidate, and I think that would be an excellent opportunity to come in on the long side of the June 30-year Treasury bond futures. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.